Episode 210 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Derek Urben. Remember, new shows are posted every Monday and Thursday. You can subscribe to our show on iTunes and YouTube. Now, if you're enjoying the show, please leave us a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Now, in today's episode, I spoke with Derek Urben. He's the CFO and Director of Business Development at Coinigy. We kicked off today's conversation with Derek telling us how and why he got involved in the crypto space. Next, we talked about Coinigy and crypto spot exchanges. We then talked about the fundamentals in cryptos. Derek explains to us the Bitcoin NVT ratio and Bitcoin comparisons to gold and silver. Finally, we chatted about Bitcoin futures, Bitcoin mining, and ICOs. As usual, thank you all for listening, and please enjoy this episode. Derek, welcome to the show.
Thank you. Looking forward to it. It's going to be fun.
Yeah, it's great to speak with you today. I love what you guys are doing at Coinigy. You're actually the first charting application that I use and I continue to use to chart all the different cryptocurrencies that I follow. And I know that Coinigy is a lot more than charting, so we're going to talk about everything that you guys are doing at Coinigy here today on the show. But I want to start off and learn a little bit more about you and your backstory. So Derek, let's start there. How did you get your start in the industry?
It's a little bit of an odd story, I would say, when learning about the others, but it was actually back in high school. This would have been circa 2012, 2013. A friend of mine was actually using a Tor client, a .onion network, and looking around, and he was just interested in it. And I kind of looked over his shoulder and I said, "What is that?" And I had no idea what it was at the time. I was never within kind of that domain, if you will. And he said, "Oh, this is the Tor network. This is kind of a decentralized, a dark web, if you will." And he said, "Everybody on here uses Bitcoin." And I had no idea what that was at the time. So I Googled it. I kind of dove down the rabbit hole, read the white paper, which I understood probably 1% of at the time, and then just kind of went into a little bit more and more. And actually, back in 2013, 2014, I stumbled upon a project called Storage, much like Filecoin, if that name rings a bell. Essentially, they are looking at decentralizing cloud storage instead of Google Drive or Dropbox, and all those parties, they would look at Airbnb on your hard drive is essentially what they did. So I joined that project, volunteered a lot of my time for about 2 years, and then actually I found Coinigy, stumbled upon it again actually on Reddit, reached out to the guys, and I said, "Hey, this looks like a pretty compelling project. I'd love to join, help in any way I can." And that was 4 years ago, October. And now we're here.
Yeah, very cool. I'm curious, back when you first started learning about Bitcoin, did you buy any of it? How did you do it? Did you spend any of it?
As far as I remember, and again, this is 5-6 years ago, but I think in 2013, 2014, after we had the whole Mt. Gox conundrum, when it came back down, I think I might have bought 3 or 4 when it was trading around $500 or $600, and I've never touched it since. I still have the little nest egg, and I've really not traded since then because I've been more than busy enough actually trying to build and run the companies.
Well, let's talk about what you're working on at Coinigy. Explain to everybody out there. I mentioned that I use Coinigy. I use it for charting. I really love the product. I think it's great. Talk to us about what Coinigy offers and why traders should be taking a look at it.
Yeah. So kind of at our core, and I think what our kind of mission/value is we're kind of a connectivity company at the core. We look at ourselves as being best in class when it comes to looking at all the crypto exchanges out there and saying, how can we connect these in one unified, standardized, kind of level playing field platform, and bringing them all in instead of having one trader, Joe Schmo, go out and try to connect to 4 of them, 5 of them have Chrome tabs open in that whole pane with memorizing UIs and UXs and trading engines and deposit addresses and everything like that. So at our core, we're kind of a connectivity company in that way. Looking at it from kind of a more business segment perspective, we kind of think we have 3 businesses within Coinigy. First and foremost is kind of what you look at as the charting. We call that kind of our data business. That is where we connect 40, 50 exchanges into the platform, all of their data, all of their order books, all the historical data. We bring it into one roof, we standardize it, and we show it to you in one kind of normal way without any different charting or colors or anything like that, and all the different exchanges out there. The second portion is kind of our portfolio, private access, if you will. So you import your API keys from your different accounts on Binance or Poloniex or Bittrex or GDAX, and we basically pull in all your balances and all your portfolios. We can also do wallets that are offline or off exchange, and it kind of gives you a whole kind of view of what your portfolio and what your crypto wealth is on any day in history or any time. And you can pull up Coinigy, you can pull up our app, and you basically say, okay, this is where I stand today. So that's kind of our second business unit there, is portfolio analytics and kind of history of wealth and portfolio allocation, asset allocation, exchange allocation. I think that's really one of our big initiatives right now, is building out that. And then finally is kind of our trading, which is kind of our bread and butter, if you will. We connect to about 14 or 15 exchanges on the trading interface, which basically means you put in your API keys and we can trade on your account directly on the exchange. You go into Coinigy, you never have to leave Coinigy, and you can say, okay, I want to trade on Poloniex, I want to trade on Bittrex, I want to trade on GDAX, and I can go in all those, all from our platform, never have to leave the site, and you have complete control over your portfolio with the trading tools.
One thing I want to talk about with you today is all the exchanges that are listed there. I mean, as a trader, I'm new to this industry. I found you guys online, started to chart, all these different crypto assets. And I looked at all these exchanges and I was just so overwhelmed at the beginning when I first started. And, I think that most traders end up, especially when they first start off trading these crypto assets, they're trading either using like Coinbase or Kraken or Binance. But with all of the exchanges that you have on there, what are your thoughts on all of these exchanges? And do you see a consolidation at some point?
Yeah, so I mean, just from a business perspective and stepping away from Coinigy and my biased views there, but it's pretty interesting to see that, I mean, there are arguably 100, if not 200 exchanges out there. You can define exchange as you would like. It can be with a volume of $1 a day, but it still names itself an exchange. And I think that's due to a couple of reasons. A, the regulatory burden to start an exchange is minimal, if any, depending on the country that you're in. Therefore, the barriers to entry of starting a crypto exchange is really, really low. Crypto exchanges can just spark up a liquidity themselves. They can market make themselves, and that really kind of makes it easy for anybody with a computer, internet connection, and a little bit of coding experience, for better or worse, can really start an exchange. With that, I mean, volume concentration is really interesting to look at. So I think probably 95% of volume is probably concentrated in the top 5, 10, depending on the day, exchanges out there. Those are all the usual names like Binance or GDAX or Poloniex or HitBTC now. And it's really interesting for us as kind of being the aggregator of all these exchanges to see how that changes over time. And kind of a difficulty for our company is to say, okay, there might be an exchange today that nobody's ever heard of, but it might be the next Binance. We have no idea. And it's looking at that, and this is a proxy for the users because it makes their life just as hard. So what exchange do you think is going to go well over the 5-year trading time that you are looking at, rather than just signing up for the one that's the best today and maybe tomorrow it'll fail? You have no idea. And that's a pretty interesting, scary, compelling, exciting, risky kind of world to be in. But it's definitely one of the Coinigy's biggest jobs to say, okay, we're going to try to make that life a little bit easier for you, and we're going to try to we're trying to list the best in class when it comes to exchanges. And one thing with that said is that we try to make our platform as agnostic as possible. I mean, we get approached by exchanges every day to have ad banners or kind of highlight them or kind of give them a little attribution. And we always say no, because we want to let the user do that themselves. We want to let the user research and discover what exchange works for them, because we don't want to be kind of interested or have any conflicts of interest within the exchange platform, because we don't want to favor one over the other. And I think that's one of our kind of core core tenets is to make sure that we are purely a platform. We're not going to favor one over the other, and I think that's in the end is going to be the best for the user. So it is definitely a scary place to pick the exchange you want to work on, but we're going to try to aim to make that life a little bit easier for you.
So take us through that process. What process does Coinigy go through to decide which exchanges to list?
Yeah, so kind of in our early days, I can kind of go through the evolution of that process. So in the early days, we were just starting. We were nobodies in the market. We had to kind of go out and do it ourselves and make sure that we got the most important exchanges on board at that time. So back in 2014, that would have been Cryptsy, that would have been MintPal, a couple others that I probably can't even name anymore because I forgot their names, but none of those exchanges are around anymore, and it changes over time so quickly. And then we kind of went through a period of, okay, we kind of got a little bit bigger. The market itself was expanding rapidly. Exchanges would come to us and kind of pay an integration fee to get listed on the exchange or on the platform, purely just from a man-hour perspective. And we try to kind of develop that pipeline on a user basis. And then today it's purely user-driven, user-demanded. So we try to listen to our community and say, what exchanges out there are you trading on that you can't use Coinigy for right now? And that's purely the number one driver. So we kind of have a community voted pipeline, and we try to list them as fast as we can as they come up, and that's kind of where it is right now.
I love it. So you're actually letting the users help you decide who to list.
Yep.
Yeah, that's great. I want to move on and talk about fundamental crypto valuation. This is a hard topic for me because I'm purely technical. When I trade cryptos, one of the great things about Coinigy when I found you guys is I could chart and use my technical analysis tools on all of these different crypto assets and decide which ones I want to trade. But I know that there's so many people out there that are looking at fundamentals when trading crypto assets. Like I said, I'm not one of those people, but I know that you have some feelings on this and you have some thoughts about this. So talk to us about how someone goes about getting fundamentals on these crypto assets.
Yeah, so it is interesting working for a company and that is purely kind of playing the TA world in terms of we have all the indicators out there that you'd ever want. And it is a little bit interesting for myself to say, okay, on the back end of things, we do have to look at this asset as an actual asset and try to see if there's any fundamental valuation that can really be applied here. So I know you mentioned some of the stuff from Chris Burnitzky in his book. I would say that's probably the gospel, if you will, when it comes to kind of fundamental research and diving deep into that. And some of the stuff they're doing now, Placeholder, is really, really interesting for myself. But looking at it further, I mean, there's a lot of research, whether it be academia, VCs, kind of token funds. Everybody's kind of looking at this and saying, okay, what does this currency want to be? Just like you value a stock differently from a commodity, from a bond to a currency and everything, we got to value these cryptos differently based on what they want to be. So one of the first questions I kind of look at with Bitcoin, namely, is what does Bitcoin want to be? And I don't think anybody really knows right now because there's a lot of development going on and a lot of changes within the ecosystem, but there's kind of two ways to look at it. A, Bitcoin will be a store of value, so long-term store of value, a deflationary asset that's going to create value over time, much like gold is the easy one to point at. Alternatively, Bitcoin is going to be a payment system. I would tell you that some of the people at Lightning Network and kind of the second layer services that are trying to increase throughput would probably be in that camp. So looking at it from a store of value perspective, you can say, okay, is this a good store of value? I would say arguably it's a very good store of value. If you look at kind of its lifetime value is up a gazillion %. And if you look at it from a payment perspective, you look at it from a transaction kind of volume and what is this kind of doing in today's world as a currency. So the fundamental one is interesting. You can look at the cost of mining a Bitcoin and what does that mean from an opportunity cost, and that kind of brings fundamental value to it for a store of value because over time, miners are still going to have to mine it and they have to bring some value to it. And you can say, okay, maybe this takes over gold. A percentage of gold's market kind of turns into Bitcoin because it's better at being moved. It's more anonymous. It's easier to transfer. It's more liquid, arguably. I mean, you can say maybe in 7 years, Bitcoin will take over, let's just say 50%. You can discount that back depending on the growth rates you apply to gold's market value and the discounts rate you use for your investment thesis. And I ran some models on this, and it comes out to like $75,000 per Bitcoin based on current market assumptions and discount rate of like 15% or something. So there is a compelling story there in terms of it just takes over gold. Ignore silver and all the other store values or precious jewelry or anything like that. So there is a compelling story there from a store value perspective. The more interesting one for myself, because I'm probably in the camp of Bitcoin wants to become a currency, because I think that's probably what the white paper originally intended, considering the fact that the title was like a peer-to-peer cash system. And if you look at it that way, currencies by nature, or all currencies to date, again, we don't know what the future is going to be like, but all currencies to date have been kind of inflationary assets that their value over time is going to go down, their purchasing power is going to go down. Bitcoin's quite a bit different there. So we're going to look at it a little bit differently because it doesn't have a GDP. There is no central bank controlling it. The inflation is a weird thing to think about right now because there is no applied interest rate on it. There's really no purchasing power benchmarks to look at it over time because it's just a young asset. So one of the more interesting things, I think this came out of Crypto Lab and Willy Woo on Twitter, was this idea of like an NVT ratio, which is essentially the network value, so the entire market cap essentially of Bitcoin, compared to basically the number of transactions and transactions volume being sent through it. So if you think about it, if I want to purchase a Bitcoin and use it as a currency, I have to enter the market, and that's going to bid up the price. As more and more people use the currency, there has to be more entry into the market, therefore increasing the price. Over time, this ratio has hovered between like 25 and probably 85 is kind of the healthy range, is when kind of Bitcoin was kind of steadily going up over time. You had the big bubble back in 2014. We reached like 177 on the ratio, and we crashed very, very quickly back down in Bitcoin. The scary thing today is that we all thought we had that big correction coming out of January where we hit 19, 20,000. Now we're down to 6.5, and we think, okay, maybe this is a good consolidation zone. If you look at it from a fundamental basis, the NVT ratio, so the number or the ratio that measures Bitcoin as an actual fundamental asset being used for a fundamental reason, a currency, for example, is actually still far above the historical average, and it's around 180 right now on a rolling 30-day basis or so. So Bitcoin, even though the price has gone down 70, 75% arguably, the transactions are still quite anemic, and it's not really being used as a currency, which is pretty scary from a fundamental kind of perspective, because there is arguably still quite a ways to fall for the price, or alternatively, every ratio has two sides. The payment mechanism of Bitcoin has to increase quite a bit to meet kind of the current network value.
All right, let's talk a little bit about Bitcoin mining. And I read how these energy costs are off the charts, and I think that's one of the great things that the futures market has brought to these miners, that they can actually hedge their cost. I think that this is obviously hurt the price of Bitcoin. A lot of people don't like it, the futures that is, because now you have actually people that are mining Bitcoin the ability to sell it before they own it. But I think that's what makes a real market, because if you're going out there spending all this money with these high energy costs to mine the Bitcoin, it's your only hedge. So I think that it's very important. But as price remains weak, how worth it is it for those to continue to mine Bitcoin? So what are your thoughts on that?
Yeah, so that's definitely an interesting kind of economic idea to look at, is what is the break-even point, I guess is the best word to use. What is the break-even point for miners? And there's a lot of research coming out of even traditional Wall Street where this number is bouncing around constantly. It obviously depends on the miner, because every miner has different costs, and there's a lot of economies of scale that are applied there. But I would say some of the more interesting research I was looking at is, or not most interesting, but probably the more trustworthy research and more compelling research, I'd say somewhere around 4,000 to 5,000 right now is kind of the marginal cost of one Bitcoin, ignoring kind of fixed costs and investments if you're a new miner, but kind of ongoing cost is kind of 4 to 5 range. So we are approaching that level, which is interesting, and it'll be interesting what the market does, and if some miners will go offline as a result of that. Which should kind of bring hash rate back down. And that's a whole other kind of economic model to look at, is how does hash rate and difficulty of mining kind of increase or decrease price. But it's also interesting to look at, okay, how did the altcoin exposure and all these other blockchains coming out, are miners going to go over there and they're going to ignore Bitcoin because of Bitcoin's price performance, rather than all these ICOs, which are exploding? Granted, all of them have been down in the recent 4 to 6 months, but how does that dynamic shift kind of the Bitcoin blockchain alone? And I think that's really still to be seen. And I really don't think anybody knows, but definitely the futures contracts and some of the more derivative products coming out are probably good, even though people kind of, the core community of Bitcoin was kind of anti-futures because of kind of industrialized and institutionalized the market. But if you're a miner, you got to hedge that risk for better or worse.
Let's move on and talk about ICOs. I've been trading crypto assets for just about a year now. And from when I started to now, in 1 year, I can't even count how many ICOs there are out there. It's absolutely crazy. And to be honest with you, I really don't even look at a lot of them because I feel like they're probably not going to be worth much of anything. Now, that's just my opinion. I don't trade a lot of these. I trade the majors. I basically trade Bitcoin, Ethereum, and maybe some Bitcoin Cash and Litecoin. But I look at all these ICOs and I say to myself, okay, how do you separate the ones that are going to be good versus the ones just to stay away from? Like I said, going back to Coinigy and what you guys are doing, you have all of these different ones out there. You can see all the exchanges that are offering all of these different tokens. How do you weed out the ones that you think are going to be no good versus the ones that we should be keeping an eye on?
Yeah. So I think first and foremost, I had some personal literature that I wrote in terms of when is an ICO applicable even? And I think that's kind of the first question you have to ask, ignoring what the team is and how pretty their white paper is and how many really, really smart people they have on the team. Ignore all that for now and look at, okay, does this company actually even need an ICO, a token, a coin, whatever you want to name it? Does it really need one? And I would say 80% of the time, if not more, my blunt and kind of upfront answer would be no. I mean, there's enough VC in the world that you can go fund all the stuff with an equity basis or equity-based raise. You don't need a special token that is going to be used for your product because there's a lot of economics behind that, or which are not very pretty. But to go back to the original question is, okay, does this ICO, does this company need a token? And I would say, for the systems that are trying to create a decentralized something, that can be a web, that can be a prediction market, that can be a storage facility, that can be what else is there out there? A kind of a decentralized web like Orchid, or storage like Filecoin and storage. I mean, those are things that all they're doing right now is trying to raise money, because in the end, that network doesn't have any economic rent that can be pulled out of it because there's no company controlling it. So the kind of the analogy I like to draw, and I think some of the people from A16Z would bring this up, and Chris Dixon on one of his podcasts, was if we originally went back to the 70s and 80s and 90s when we were trying to create the World Wide Web, no single company tried to own it. I mean, there's AOL and all the kind of intranets that had their own thing going on, but there's a reason that it was the government and academia that kind of created it first, because there was no incentive for some company, some profit company that's going to go in and say, okay, we're going to create this internet and just open it up to the world, because there's no incentive to do that. When you look at ICOs and kind of the core blockchain idea is that there's kind of a new alternative incentive model in terms of, if I raise an ICO, I can fund my development of 20, 40, 50, 60 developers to go build this, and I can pay their salaries and their rent with this ICO token at first. But once the infrastructure is in place, once the Filecoin network has been built, you can even just dissolve the company itself and just release that infrastructure out to the world. And the users of the network and the contributors will build it and keep on building themselves because they're incentive to do so. Because the token should accrete value over time as the network gets bigger and bigger and bigger. But 90% of these companies are raising money. Okay, you're going to get this token, XYZ coin, and we're building this software called XYZ. And if you buy our token, it's going to be 50% off it for you once we build the actual platform. It's essentially trying to fund Starbucks with Starbucks gift cards instead of equity or bank debt when Starbucks was launching it. It doesn't make sense to me because these tokens aren't needed. They're going to be claimed as securities because you control them. A single third party controls all of them. And then they're going to be going back and looking at all these assets. Okay, this is security. Did you guys sell this security to any non-accredited investors? Where's all the regulation around this? Can you guys pay for it? And it gets pretty ugly when you look at all these companies out there that are what I like to call decentralized payment tokens, and not decentralized blockchains or open networks like a Filecoin or like an Orchid or like an Augur or anything like that. And I think it's getting scarier and scarier by the day. When you look at that, I mean, then there's kind of the second level in terms of you have to do your own due diligence. Just like there's an S1 filing in traditional finance that kind of discloses all the company's operations, the teams, the kind of current state of affairs, the management discussion. There is no infrastructure in place for ICOs. Essentially, it's whoever has the nicest white paper, whoever uses the best words in the white paper, whoever has the nicest business deck is probably going to get the most money. And when you look at platforms like Telegram, which, as far as I know, is not a decentralized network. It's a messaging app, as far as I know. And again, this could change over time. But the reason they need $1 billion is I have no idea. But they were able to go out and basically tell a pretty compelling story that they have a lot of smart people working on the project and a pretty solid white paper with some good backup on it. And computer science masters or PhD wrote it. and they were able to market it. And one of the things I think was pretty interesting in kind of the SEC's guidance from earlier this week or last week was that a lot of these things aren't being marketed to actual users, like a person that's actually going to use Filecoin Network to store their personal documents, but rather they're being marketed to investors, which therefore should imply this is a security and not like a payment token or anything like that or a currency, but rather a security because the investor is expecting some type of future return because of the company's actions. And I think it's those that I would keep my hands off for now because nobody knows what's going to happen to them from a regulatory perspective. And then you have to just look at for the kind of the straight up scams. And unfortunately, there's been more than enough of those by now. And it's pretty unfortunate because it does kind of dirty the waters for crypto and only makes our reputation harder to rebuild. But there's more than enough out there. And it's really coming down to the fact that companies need to be built. And I think Coinigy is really trying to do this. And we're not going to recommend one over the other. We're going to try to provide you the tools, the easy links to everything you need in order to go do that research yourself. Because right now, there is no kind of protection for any investor out there. There is no insurance on deposits or anything like that. And I think looking at it down the road, whether it be a self-regulatory body coming out or a third-party existing regulatory body coming out, it is needed, whether the community likes it or not. Because, like the question you asked is, how do I even know if this thing's valid or legit? And right now, you have no idea.
Yeah, I mean, that's exactly it. I look at them and go, which one's even worth looking at? I don't even have a clue, But fantastic explanation on ICOs. Do you have a resource that you go to find some of these ICOs that are coming out?
So admittedly, I have not traded for the last 4 years or so, mostly because we think it's a pretty big conflict of interest running kind of a technology platform within crypto to kind of trade in our own side. So we make it kind of a company policy to not do any of that. I haven't done it because I'm just too busy, and I just think having that little nest egg is good enough. But from a research perspective, it's not a single repository anywhere. It's everything from Medium to Token Economy is a really good resource to just Reddit and trying to find all the studies, to academia, SSRN, and all the papers coming out there. So unfortunately, I don't have a one-all be-all, but I'm looking for it still.
Yeah. A lot of times I always ask people like yourself, whoever, you're right on the pulse of this industry, and just fantastic insight so far today. I always ask them, or I used to ask them, what's your 5-year outlook on the industry? But things move so fast nowadays. It's really more like your 5-month outlook. But I'm going to ask you, as someone who's been involved in this industry for a good deal of time, you've seen a lot of change since you've been in it. How do you see this industry evolving over the next, let's say, year or two?
Yeah. So unfortunately, I don't know what's going to happen tomorrow, but I can still try to answer this question. There's a few verticals I would look at. First and foremost, purely from a financial perspective, what is this market cap going to do? I think we all want to return back to December and January, but that was a pretty illogical thing to do from a market perspective, to run up that quickly. From a fundamental, from a regulatory, from an infrastructure perspective, there was no reason it really happened. And I think everybody got criticism for that. But from a financial perspective, we don't try to throw out price targets, but there have been more than enough from all the exchange operators out there for Bitcoin at 50,000 or Bitcoin at 100,000 or Bitcoin at $250,000 by 2018. I wouldn't want any of that to really happen because it means there's just another return to illogic. I would rather have it be a pretty kind of healthy, if not stagnant market for a while. So a lot of the kind of not bad players, but the parties that are just doing this to do it can kind of get weeded out. And I think consolidation on both the exchange side, but also just the general technology side needs to happen in order to make this market a little more healthy. And I think that's definitely going to happen. I know there's a lot of VC capital in this world, and a lot of ICO capital in this world, but I think for the projects that are actually building a true kind of value add tool, hoping those will survive beyond just the ones that are raising ICOs and trying to run with it, is definitely going to happen over the next 1 to 2 years. If not, it's going to be pretty unfortunate. And then from a regulatory perspective, I think a lot of the governing bodies around the world, including the SEC here, is really kind of heating up, and they're taking a pretty nuanced and pretty good stance in my perspective. I think some of the commentary that came out was really, really healthy. The market agreed with that. I mean, Ether popped up, Bitcoin popped up. And I think it's definitely appreciative of the government regulator is not coming down with kind of a blanket view, but rather, okay, each of these tokens, each of these companies is unique in their own little way. We got to regulate them on more of a case-by-case basis rather than just putting one regulation across all of it. And I think that's pretty smart, and it's definitely going to be good for the longer-term success of the industry. Outside of that, there's a lot of unanswered questions right now about this whole Tether idea and kind of stablecoins idea and what the manipulation was there. And I think all this is just going to run its course. And I think the good players will kind of rise up, and some of the bad players will either hurt themselves and shoot themselves in the foot, or some of the regulators will take that job and do it for them. But I think right now, it is kind of, I would say, the seventh or eighth inning in terms of kind of the Wild West, and trying to say, okay, we got to bring some maturity to this market, some standardization to this market on all aspects, not just what Coinigy is involved in, but everything. And I think that's going to be what kind of the next 1 to 2 years is. And I think everything else will fall in place. I think the market cap will return to a nice place where we can all recoup our losses. And I think the technology firms can start building up and raising true capital. I think there's an infrastructure that can be built out. And I think there's, at that point is when the institutional money feels comfortable enough, not only from a financial perspective to come in, but also from a safety and maturity perspective to say, okay, this market's ready for it. Let's bring this a lot more mainstream.
Derek, thank you so much for sharing your perspective. I really appreciate that. But we're not done yet. I have some rapid fire questions if you're ready for those.
All right, let's do it.
All right, everyone. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Derek, first question. Who has impacted your life the most and why?
I would say my father. I think everything I know today is probably a result of him.
What is the most difficult thing that you've had to overcome in the financial services industry?
I would think probably waking up every day and that there could be a news item that could be crippling, a regulation item that could come out that would be crippling, or some new competitor that could wipe out your entire business model is pretty stressful.
What's the number one resource you spend your time on?
Reddit.
What's your favorite book about trading or the markets?
Fooled by Randomness.
What's your favorite movie or TV show about trading or the markets?
I got to be cliche and go with The Big Short.
What's the best piece of advice that you've received about trading or the markets?
By Robert Arnott, investing what is comfortable is rarely profitable.
Now, if you can give a piece of advice to the new people interested in getting involved in trading or the markets, what would it be?
You should be able to teach the subject material and be able to explain the subject material before you invest in it.
Last question for today. If you weren't in crypto, you'd be doing what?
Working my butt off to get into crypto.
Derek, where can people find you on Twitter, and give us a website to check out?
At Coinigy on Twitter, and then Coinigy.com, CoINIGY.
Everybody, I highly recommend you go and follow Coinigy on Twitter and go and check out their website, see what they have to offer. Really beneficial stuff for traders out there. Derek, thank you so much for your insight today, your perspective. This was awesome. Thanks for coming on Futures Radio Show.
Likewise. Take care.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.